Hello, Professor Bagus. Thank you for joining us today.
Hello, Mr. Bagus.
Good afternoon.
It's a big pleasure to be part of our show. My first question is, European Central Bank moves into an unfamiliar world of negative interest rates. What is the essence of this policy, and is it dangerous?
Well, this idea goes back to its typical Keynesian thinking. The idea is that we are still in a recession, there's still unemployment, so what we have to do is to boost aggregate demand via lowering interest rates. So if interest rates are already at zero, so what they think they have to do is to lower them below zero. Central banker thinks the same, and they think aggregate demand is a problem, but this is not the case. Demand is never the problem. I always want to consume things, I want to buy stuff. The question is, if I produce enough valuable things to buy what I want. And it is the problem in the supply, in the production that we have. There are too high taxes, there are too much regulations. Government debts are so high that there's high uncertainty. Private debts are still very high, much uncertainty, and this is a problem of supply. Moreover, the structure of demand, it's not the problem of aggregate demand, but of the structure of demand and the structure of supply. They don't coincide. In countries that still have high unemployment, such as Spain, there was a distortion of the structure of production produced by artificially low interest rates. So, for example, in Spain, the housing sector grew much too big. They were producing 1 million new housing units per year in 2008. So the problem was that the structure of supply of production did not coincide with the demand, because people did not demand 1 million new houses per year anymore. They wanted other things more urgently. So what has to be done in this situation is let the housing sector shrink, the structure of production align again with consumer wishes. It does not make any sense to push artificially more demand into this distorted structure of production and force consumers via negative interest rates to buy something that they didn't want, in this case houses. But what you have to do is exactly let the malinvestments liquidate, let prices fall so other projects become more profitable, so other projects become viable, and you need more savings to finance this project. But if you lower interest rates below zero inclusively, you are doing the opposite. You maintain these malinvestments, you disincentivize savings, you keep up the over-indebtedness of the economy, especially of the government. You give the government more incentives to indebt yourself, and this makes the readjustment slower.
That's a very good point, Professor Bagus. But Mario Draghi, in his last press conference, described the concept of helicopter money, the idea that the central bank would finance economic agents directly, as very interesting. What is your opinion on this topic?
Yeah, to print money and give it directly to consumers has considered to be a taboo. So it's if they would do it, it would look like an act of despair and could lead to turmoil in financial markets and reduce the confidence in the currency. If you look at the accounting side, what the central bank would be doing, add a liability on its liability side, print money, more liabilities but no more assets if it gives it directly to consumers. So equity would be reduced. The central bank could be balance sheet insolvent. It could, of course, continue to operate and pay its bills because it's can't print its own money, but it would be less capable of contain inflation if inflation starts to run off, because the percentage of real assets on its balance sheet in relation to all liabilities would be less. So the central bank would be less powerful, and in the end, fiat currencies depend on the confidence of its users, and once inflationary expectations take off, it's very difficult to control them. So I actually don't think they will risk it and do this helicopter experiment because they just don't know what will happen. It could run out of control.
In this context, some countries such as Germany insist that there should be a limit on euro area bank sovereign exposure. Do you agree with this idea and this opinion?
Yes, it should be just much more restricted than Germany wants. You know, one of our main problems today that banks and governments live in a symbiosis. Governments give banks the privilege to print money, to produce, not to print money, but to produce more money out of thin air. And banks use this new money to finance governments. So banks finance governments, governments give privileges to banks and bail them out. If governments go bankrupt, the banking system will go bust. If two big banks go bankrupt, the governments are going bust. So they are too much connected. And Germany, of course, southern governments in Europe are very high indebted and their banks finance them. And Germany is indirectly guaranteeing the debt of Spain or of Italy. So they want to reduce this finance of the banking system of government debts. But of course, in Germany, the same happens, just to a less degree, because government debts are lower, but German banks also buy German government bonds and other government bonds. So what should be done is to limit it to zero, so to prohibit banks to buy government bonds, to prohibit central banks to buy government bonds and to accept them as collateral. But Germany will, of course, not demand that.
Mr. Bagus, Professor Bagus, do you think the European Central Bank have a plan for a possible Brexit? What's your mind on that?
They probably do, because they have much time to think. Very well paid persons there, so they will have some idea, and it will probably boil down to, because there might be market turmoil, so it will boil down to just produce more money to compensate for this turmoil.
But is it appropriate one? Are they ready to tackle this possible situation?
Well, that we will see when it comes to it. Of course, the system is very unstable because there's so high debts and they are all interconnected. So if one player falls down because of the Brexit, and one big bank or company has problems because of this, then this puts in danger all of the system. Of course, they can print all of the money they want to stabilize it, but we will see if they are successful.
The Fed didn't raise rates in March. Chair Janet Yellen told the World a week ago that an April increase isn't happening either. The Fed dramatically scaled back its forecast of rate hikes in 2016 from 4 to only 2. Why is the central bank so hesitant to raise interest rates from almost near zero?
Well, they did raise rates like in December, you know, the Fed, and market tanked, so they got frightened to do more. Of course, what I call it the SERP trap, the zero interest rate trap. They are zero interest rate policy trap. Once you are at zero interest rates, what you do is you don't incentivize to pay down debts, but to have ever higher debts. So agents get ever more indebted and dependent on the zero interest rates, especially governments. So if you raise interest rates now, governments and other highly indebted players get into problems, and they are so interconnected today that when one domino falls, all other may fall as well. So once you're into this trap of zero interest rates, it's very hard to get out without leading to a general collapse. So they got very cautious now.
Okay, obviously, monetary system nowadays needs reform. What is the Austrian view, and what is a starting point for this reform? Hard question, tough, very tough.
Tough one.
Yeah, well, the private money has been nationalized. The gold currency that people used more than 100 years ago has been nationalized. So gold should be given back to people. Central bank gold should be given back to the people. We should start with the gold currency again, and then let market evolution see if other currencies, competitors, arise. The general legal principles should be also applied to banks. General legal principles require to hold 100% reserves on deposits. For deposit contracts, the depositor has to maintain it always available. That implies for banking 100% reserve. Banks should not have the privilege to do other than other economic agents. So this should be applied to banks as well. And then we can eliminate central banks and all banking regulation.
Mr. Bagus, very soon, hopefully, you will be here in Sofia. Would you like to tell us when and why?
Yeah, it will be as a great privilege and pleasure to be that I will be there on the 21st of May for a conference on the future of European banking, and I will talk on the misconstruction of the euro currency, very related to my book on the tragedy of the euro, and then I will talk also on the attempts that has been made during the last years to fix this misconstruction in form of the banking union and other attempts.
Thank you so much for this conversation. We wait for you, Mr. Bagus, on behalf of our audience. I would like to thank you for this most informative interview.